Why did Brad Garlinghouse just break his silence with this bold statement? According to our news right here from Times Tabloid, when Ripple CEO said he hasn't been this optimistic in years. Right? So imagine holding an asset for years, fighting the biggest regulators on the planet, and watching everyone else doubt your vision. Then suddenly the clouds part. The rules of the game completely rewrite themselves, and you realize you are holding the keys to a financial revolution. So right now, this June 2026, the entire digital asset landscape is experiencing a massive shift, and it all traces back to a newly resurfaced video clip shared by the prominent crypto analyst BankXRP. In this footage, Ripple CEO Brad Garlinghouse looks directly at the camera and drops a statement that should send chills down the spine of every single market participant. He admitted that he cannot remember being this genuinely optimistic about the industry in a handful of years. When the CEO of the most regulation tested company in crypto history says he hasn't been this confident in years, you don't just listen. You look at the data. So in this video, we are breaking down the massive structural shift happening underneath the surface, the historic progress of the Clarity Act, and why the world's largest financial institutions are quietly moving billions of dollars into position. All right, before we continue, let's check XRP price right now, which is playing at 1.1460. And as we can see on this daily chart time frame, XRP is continuously creating or forming a bearish candle, indicating that the bullish momentum or selling pressure is still very strong. So my analysis for the coming few days is that XRP's price might fall down until this next support here at $1.0169, or exactly $1 price level, provided that the bearish momentum, of course, or bearish pressure will continue. All right, now let's go back to our news right here, and let's answer the question about why is the US market a giant sleeping bear that is finally waking up. All right, to understand the core of this optimism, you have to look at the sheer scale of the playground we are talking about. The United States controls roughly 22% of global GDP. All right, let's highlight this part, 22% of global GDP. For years, the US regulatory stance toward digital assets wasn't just strict, it was openly hostile. It was a closed door, but the door is officially unlocking. So as a market observer, I have watched this narrative play out day after day. For years, people said crypto didn't need America, but the rest of the world would drive adoption. But let's be completely honest with ourselves. You cannot ignore the biggest economy on earth. The fact that the US is shifting from hostility to open integration means the floodgates are being prepared. So in my view, retail investors are completely missing the big picture here. The market has absolutely not priced in what happens when 22% of the world's wealth suddenly gets a green light to legally accumulate these assets. Right. Now, the next question is, how did the Clarity Act just make history on June 1st? All right. We aren't just talking about vague hopes or positive speeches anymore. We have concrete historic legislative action. The Clarity Act has been moving through the halls of Washington at lightning speed. On May 14, the Senate Banking Committee passed the bill with a powerful bipartisan vote. Right? Let's highlight this part. May 14, in a bipartisan vote. And just days ago, on June 1, 2026, the bill was officially placed on the US Senate legislative calendar. So in my opinion, this date, which is June 1st, is a monumental milestone that a lot of people are completely ignoring because they are too busy looking at daily price charts. Being placed on the legislative calendar means the bill is no longer stuck in a committee box, right? The bill is no longer stuck in a committee box. It is now officially eligible for a full Senate floor vote. So my perspective on this is very simple. This law removes the shadows. It provides the exact prominent legal definitions that institutions have demanded for nearly a decade. Once this passes a full floor vote, the era of regulation by enforcement is dead and a brand new, fully compliant financial era begins. Right? Now, why are Vanguard, BlackRock, and Franklin Templeton shifting their stance? Garlinghouse explicitly pointed out that the heavy hitters that appeared on the stage this major industry event. So we aren't talking about small startup companies or speculative venture capitalists. We are talking about gatekeepers of global capital. So let's highlight this part. All right. BlackRock, the largest asset manager in existence, and Franklin Templeton, which has actively been building tokenized funds on public networks. But the biggest shockwave came from Vanguard. Now, in my opinion, if you understand traditional finance, you know that Vanguard has historically been the most stubborn, right? Most stubborn and anti-crypto institutions in the world. They refuse to touch it. They refuse to offer it and openly turn their backs on the asset class. But as Garlinghouse noted, we have just witnessed a massive sea change. Vanguard opening up to this space is the ultimate proof that the institutional dam has broken. So in my eyes, these legacy giants aren't entering the space to speculate or trade memes. They are here because they see the underlying infrastructure being modernized, and they refuse to be left behind the old world. Now, how does all this directly benefit the XRP infrastructure? So where does XRP stand in the middle of this institutional migration? It sits exactly at the intersection of regulatory compliance and enterprise utility. Ripple's core payment infrastructure was specifically designed for the exact cross-border use cases and liquidity management that these multi-trillion-dollar asset managers actually care about. So, my takeaway as an observer is that XRP is uniquely positioned to capture this institutional wave, while other networks are trying to figure out how to become compliant after the fact. Ripple spent years in the legal trenches carving out the path. Now that Clarity Act is on the verge of a Senate floor vote, the structural barriers that kept banks and asset managers at a distance are completely collapsing. When these institutions start moving value across borders using compliant rails, they will naturally gravitate toward a token that was built from day one to handle institutional liquidity. All right. Overall, when we piece this entire puzzle together, the picture becomes incredibly clear. We are no longer living in the speculative crypto market of the past. The landscape this June 2026 is defined by historic legislation, structural tailwinds, and a fundamental realignment of global wealth. Brad Garlinghouse's profound optimism isn't built on retail hype or short-term social media trends. It is grounded in the fact that the US Senate is preparing to vote on a law that legalizes and structures this asset class for the largest economy on earth. With Vanguard reversing its historic ban, BlackRock expanding its footprint, and the Clarity Act sitting on the legislative calendar, the foundation for massive utility-driven growth is officially locked in. The structural shifts are happening right now, right under our noses. The institutional players are already on the field. The rules are being printed, and the era of legal clarity is finally here. Alright, and this finally ends our video. Thank you very much for watching, and see you on the next one. Or you might just as well check this recommended video right here.